Let's talk about velocity checks. These are usually a staple of any fraud monitoring solution, and they're very simple. We have velocity of use and velocity of change. Velocity of use checks gauge how many times a credit card number or an address or a phone are used within a given amount of time, while velocity of change checks check how many times that card number or phone number or address has been changed in the same period of time. Let's take a look.
Velocity checks, as the name says, verify the speed at which specific information is used or changed. For example, the number of times that a specific credit card has been used in a period of time, or the number of times that the address associated with it has been changed in that period of time. There are two main categories of velocity checks that are frequently used. The first are velocity of use checks. This metric captures the number of times that a certain information field has been used in a given amount of time. For example, the number of times that a given credit card has been used within 6 months, for example, or the number of times the same phone number has been used in that period of time, the same shipping address, and so on. Then we have velocity of change checks. These work in a similar manner, but they capture the number of times that an information field has been changed in that given amount of time. For example, it can detect the number of times that a card number has changed associated with the same shipping address within 6 months. While each of these checks can be used to detect obvious types of fraud, for example, the velocity of use checks can easily detect bust-out activity where countless purchases are made with the same card, and velocity of change checks can be used to detect card block fraud where multiple card numbers will be used with the same shipping address or number. In reality, they are more efficient in combination with other measures. They are considered almost a staple of any fraud monitoring solution, and they work especially well combined with other measures such as hotlists, identity verification, fraud scoring models, and others. What are some examples of velocity checks? Velocity of use, for example, can be used to detect how frequently a credit card is used, but also other fields. For example, it can detect the usage of the same fake shipping address for multiple purchases. Velocity of change checks can be used to detect dynamic or morphing fraud, or just fraud at scale, because the same card numbers will be used with different names and different addresses. And finally, these velocity checks can be used in both single merchant or multiple merchant variations. They can take into account just the consumers of one merchant or multiple. And naturally, any system that does the latter will detect fraudulent usage or change in information much more easily because they have more data. What are our key takeaways here? The first is that velocity of use detects the speed at which an information element, such as a credit card number, is used within a given time period. The second is velocity of change. This detects the speed at which an information element, such as an address, is changed within a given time period. And finally, velocity checks are usually used as part of bigger solutions. They are powerful on their own, but they become even more powerful when combined with other tools and with data from multiple merchants.
So as we see, velocity of use and change checks are very useful, and they usually work even better in combination with other fraud prevention techniques.